This session tonight is going to be probably a 3-part series because there is a lot to cover in this training portion of optimization, and the more I spend putting together basically a presentation on optimization, the more I realise that it's gonna take us about 3 sessions to get through everything I want to cover. But at the end of it, you will definitely have a very good understanding of optimization and how to use it and apply it to your trading without over optimizing your strategies. I'll talk a little bit more about that through it, but basically tonight's presentation is titled Walk Forward Optimization, so thank you for joining me. But what I'm going to cover is I'm actually going to cover this is our agenda. So optimization overview, demonstration, obviously we're going to do a demonstration in TradeStation, inputs and filters. So we're going to cover, what is a strategy, what are indicators, how do we use a strategy to develop a system up, and then how do we use that system to develop robust settings for our system. We're going to talk about optimization methodology. I'm going to talk about interpreting the reports that we have in relation to our optimization. We're going to start to discuss walk forward testing. We're going to produce a robust strategy as a group. So it's all going to be about, and I'm going to introduce some new terminology to you as well. So this, as I mentioned before, we've got probably about 45 minutes tonight. So this session will be tonight 45 minutes. We'll do part 2 on Monday and part 3 on Wednesday. So it's going to be a fair bit in it. But I'm recording the session, so definitely worth going over this stuff because there'll be some new terminology and some new things that you'll pick up, hopefully. And I'm sure you enjoy it. And the other thing I need to do tonight is also give you an update on a few things that are happening within GMT. So just give you a bit of an update there. And I've also put together some. There's a couple of strategy updates that I've got to talk to you about as well. So what I'll do is I will get stuck into the main part of the course first, and then I'm going to do the updates towards the end. So let's go through, what is optimization? So optimization is a process of finding the optimal input parameters for your trading strategy. So it's about finding the best inputs for your strategy in the V2, or you might be trading one of the other strategies, the Renko. Your best inputs based on historical back-tested data. So whatever your data you've loaded into multi-charts, TradeStation, MT4, NinjaTrader, it doesn't really matter what platform you're using, you're basically basing your optimization on back-tested data. So being aware of that, we need to remember that the optimization is really giving us a look at what's worked in the past, and obviously there's no guarantee that that's going to work in the future, but it gives us a benchmark or a set of rules to apply going forward. Now obviously there's a lot of variables that we need to take into account when we look at our strategy going forward, and we're going to be discussing that in those variables in this session and in the coming 2 sessions, because what we're going to do is we're going to put together a very, very easy, simple way for putting a strategy together, back testing it, making sure it's robust, and then applying it in the market. So it's not complex, but we need to make sure when we do this process that we do it well, and that we also take into consideration that the markets are dynamic, they're moving all the time, and there are certain filters or certain indicators we can use to get a really good eye view of exactly what's happening with the market, so we can then base some decisions on our inputs that we've got. So what I'm going to do is now one of the things that we talk about with inputs is that developing your back testing data is that you don't want to basically put everything in the kitchen sink and test everything up, because one of the things with optimization, you've probably heard the term before, over optimized strategies. You definitely don't want to get into a situation where you're you're testing a strategy up, or you're back testing a strategy up, and you've come up with this fantastic results, but it's over optimized. It means that you've basically looked at every single input on your strategy, and you've optimized every single thing based on the previous market conditions. So that's what we're going to talk about and focus in on tonight. That's one thing we typically want to avoid. So we'll go into that now. Now, how does the optimization help us moving forward? Well, obviously it gives us a bit of history about how things have unfolded in the past, allows us to basically develop up a framework for moving forward with a strategy. But is that really all we need to do with our strategy? Is the testing and optimizing our inputs, is that all we need to do? What are some of the other things that we need to do as a group or as individuals to make sure that our strategy is going to work moving forward? I mean, we might spend a number of, and again, this is it's a Q&A session, so I'll be asking questions, you'll be asking questions. So if I put forward a question to the group, I'm absolutely expecting a response from anyone who wants to have a go at it. So basically, how does the optimization help us moving forward, and what else do we need to do once we've optimized our strategy? We've developed up inputs that are robust that we can use moving forward. What else do we have to have in our arsenal to ensure that system is able to be applied in the market in real time, and that it continues to work in the market in real time? Or it may not. But what are some of the tools that we've got? We've already got them here. We've been through it over the last couple of weeks. We've spoken about different things we need to look at, different tools, different variables that we need to look at with our trading. What are some of those things that we need to add in to our strategy trading that are over and above the optimization? Okay, so one of the things we're definitely going to do is we're going to run a daily chart. We have to have a daily chart running, because that's giving us a clue to volatility. We're using a volatility stochastic. We're looking at position sizing and money management as a way to help us with our trade entries and maximizing the profit that we're potentially going to get out of our system. Days of the week, times of the day? Excellent, Stephen. Anything else that we would use with our strategy moving forward? What happens when the strategy starts to go into a drawdown? What's the mechanism there for applying with it? So it's not just the component of our R break or our circuit breaker perfect. So that's really good. So it's not just, we don't just have a strategy with inputs and away we go. We've also got some things that sit around the peripheral of what we're doing to make sure that our systems are running well. So very, very important that we don't just assume that long and short bias. Excellent, Sean. We don't just assume that the system is going to run as it has done in the tested data. So we've got to make sure that we're trying to build something that's robust. And we're going to talk about this tonight, and we're going to talk about the systems, and we are going to, as a group, build a robust strategy from scratch. So let's have a look. Are the market conditions the same or similar from the back testing? So that's one of the things that I think Sean has mentioned there with the volatility. You may have tested up your system, and it may have been in a highly volatile market, very long bias. You've got these settings now, these inputs that you've basically put together, and you're pretty happy with those. You apply those into the market, and suddenly, the first couple of months are screaming along. You're feeling really happy and content with everything, and then you realise that the system's starting to go into drawdown, but you haven't really kind of explored what's happening with the market. You're just trading the strategy. You've just turned it on. It's running. It's taking all the trades as you expect, but you're going into a drawdown. So it's more than just managing, or it's more than just turning the automation on. And this is where a lot of people kind of struggle a little bit with the whole concept of managing an automated system. You have to manage the current phase of the market, and you have to be able to, as a professional trader, apply the strategy that's most applicable to that phase of the market. So whether you've got volatility, whether you've got low volatility, rising, falling, or whether you've got a a market that's extremely bearish or extremely bullish. So they're things that we need to do as traders and with managing our system. So there's probably only one thing, system performance tracker as well. There's probably only one system that we have that has required very little, if any, at all, adjustment in the 2 years I've been using it, and that's that system number 3. Very, very robust strategy, trades consistently, and I think it's because it's just really at that time of the day where there's volatility every day on that US Open, and that crude strategist has just kept kicking on beautifully. So more on optimization. Optimization only gives you a guide to what may work moving forward, and optimization to historically backtested data to get the optimal settings. So we've covered that. We've said it's giving us the historical best settings, but in no way do we rely on that historical best settings as a guarantee that we're going to make money in the future. We've still got a lot of work to do as system traders. We've still got to do some work moving forward. So let's. So the goal of optimization is to test your strategy for robustness based on backtested data. So what we're trying to do is we're trying to get something that we've put together that we feel is going to be robust enough in the current market conditions. It has to basically hold up in these conditions and make money moving forward. So one of the critical things here, and the underlying thing here, is it has to be robust. So what you're looking for is you're not looking for something that has been over optimized. So if you've got, as we do, we've got a number of settings that we've got, and I'll take you through that shortly with the V2. There are over 20 or more different inputs that we can test on or we can optimize. Now, do we want to do an exhaustive test of every one of those settings, or do we want to try to keep it fairly generic and get settings that we know have shown profitability in the past, or that test up and show that they're profitable, and then we can basically use those external things as we go forward, like volatility, the long short bias, days of the week analysis that we spoke about. So really optimization only gives us a guide to what may work moving forward, and as we said, it's on historically backtested data. Now let's have a look at the different types of testing, or the different types of optimization we can potentially tap into. So, and we're going to go through an example, a practical example of this on the chart. So we've got exhaustive, which is basically testing, as I mentioned before. It's looking at every single input in your strategy. So if you're looking at the V2, say the cycle trader like we did on Wednesday, we're looking at every single input there, and I said over 20 inputs, and we're going to test, we're going to run an exhaustive test on that to get the best possible combination. Now, as I mentioned before, if we do that, we're basically really over optimizing our strategy, aren't we? We're really taking a set of data for 6 months, 12 months, whatever the time period is, 3 months, and we're saying, right, well, I want to get the absolute most profit I can out of that time frame, and I'm going to test every single possible scenario. Now, as soon as, what do you think is going to happen when we take that? If we've done that, we've said, right, well, every single possible scenario is going to be tested, so I want this thing to be finely tuned like a Ferrari, and when I take this for a test drive, this thing is going to absolutely fly. What's going to happen with our system when we take that highly calibrated, highly optimized system into the market in real time and apply it on our charts? What do you think is going to happen straight away when we start kind of applying something that's highly tuned to what's previously happened over the last 6 months, remembering that you're going to get all types of market conditions? You won't get the same results, that's exactly right. And we can use it'll work until it hits a bump, and then all we need to see is the market conditions change slightly to what we've had in the last 6 months. It'll fall over. So the other thing to remember too is that we need to make sure that if we do test something up, we have to be prepared that the market conditions will change. So regardless, because remember that we're optimizing our system based on past historical results. So what that means is that our number one focus, our number one goal is to get an objective, robust strategy. But our secondary function, or our second goal, is to make sure that whatever we trade, whatever we bring into the market, we need to be able to have a backup plan. We need to have a backup system, a backup plan, a backup strategy, some backup settings, something that allows us to say, right, well, this thing, the trend trader, worked when the market was volatile. It worked beautifully. And we've seen it with all the systems we've traded. You know, you'll get periods where the systems will run beautifully, then they'll hit a flat patch. Why would you trade a system that is basically, and the robust systems do this, they have a huge run up in equity, or a good run up in equity, then they'll flatten out. And they'll do that for, say, maybe, 10, 20, 50, maybe 100 trades they'll do that. So they'll be flat. And Charles, you showed me an example of that this week. And there's been a number of traders, and I think Brett, you showed me an example today, where you've developed up a strategy that is absolutely flying along, and it does hit a flat patch. Now, isn't it then kind of incumbent upon you to say, right, well, my system's consolidating at the moment, it's not really going anywhere, it's treading water. What can I do now? What have I got available to me in my repertoire of systems, or my library of systems, to be able to say, right, well, I'm going to basically just kick this one on, because I know the market conditions have changed a bit. I've got a very robust strategy. It's still ticking along. It's not, it's kind of break even, but I know that if I kick this one in now, it's basically game on. I've got something that's going to suit the market conditions that are in play now. And this is what we're going to be doing. We're going to be looking at, all right, we're going to look at a system, we're going to test it up, and then we're going to start to go through the walk forward analysis, and then we're going to develop up a strategy that can be applied for different market conditions. So that's what this whole process is going to be about. So that's exhaustive. Exhaustive is where you basically look at everything, test everything up, and the reason why a lot of people get excited about exhaustive analysis is because you can really maximize the profit over the last 6, 12, 2 years, whatever the time period is. But again, you're highly calibrating your system, and it has a higher potential for falling over. The other thing with exhaustive type testing is that while it tests all possible combinations within the strategy, it's very time consuming. Now, if you don't have a high-end computer, you're talking about a very time consuming process. The other option to that type of exhaustive testing is generic testing. Now, this generic testing, you'll see me talk about it today in TradeStation. It's really a search for, it searches, generic testing or generic optimization searches for a method that mimics the process of natural evolution. So what it does is it doesn't absolutely test and grab every possible scenario and get the best fit for every single input. It really just, it favors the groups of inputs that are better and bypasses, the ones that aren't. So it'll go through your testing. It'll look at typically look at a set of groupings of good results, like your better results, and then it'll eliminate the poor ones, but it won't exhaustively test your entire strategy. So it discounts obviously the poor groups, and it allows you to put together really a very quick test of your strategy. You'll typically find that the generic type testing is more robust, because it's not trying to fine-tune the system. It's just taking a large enough sample size to show the best outcome based on the testing that it does. So it doesn't really yeah, it's genetic. Sorry, did I say generic? Genetic. Sorry about that. I've been talking about generic today as well, but no, it's genetic. So it's genetic, and it really will run. It'll run large runs, but it won't run the exhaustive runs that the exhaustive testing does. So it won't look at every single input, optimize it, and then basically have a highly calibrated setting. So the genetic option is really the one that that we're going to kind of focus in on a little bit tonight. We will look at exhaustive. We'll look at what happens when we apply an exhaustive test, and we'll look at what happens when we do a genetic test, and we'll just see how much of a variation we get when we apply the two. So the other thing we're going to talk about is walk forward optimization, and this is really about looking at your data as a sample group of data. So it's walk forward testing, walk forward optimization. Those two terms are interchangeable, but basically what it's saying is that we're looking at what we call an in sample data and out of sample data. So our in sample data is the data we test up, and our out of sample is what happens once we've got our settings and our inputs that we're happy with. Then we go and test those against basically the market conditions that are in the here and now. Or it might be that we, for example, put together a block period of testing, and we develop up our inputs, and then we start to walk forward and test those based on a weekly basis or a fortnightly basis or a monthly basis. And that allows us to see, all right, well, based on these inputs that we've got for these market conditions, how are these inputs basically responding to the current market conditions? And then what we can do is we can then say, right, well, if, for example, we've tested up 3 months of data, so that's our in-sample data, and then we add another, say, month to that, then we've got 4 months of data, and we might decide, right, well, we'll apply our 3 months of data to our current month of walk forward testing, and that'll give us obviously a result. And if we start to see those results or the market conditions change slightly, we can then optimize based on the new month of data that we have as well. So we're continually optimizing as we go forward. So that's another option we're going to go through as we go through this process. So you can see that there's a fair bit to cover tonight, and so what we'll do is rather than look at slides all night, we'll go to the charts and get our hands dirty. And I would suggest you definitely take some notes, because if you'll probably find that some of the stuff we cover tonight may be new. I will be recording it, but if you have questions, definitely fire those questions away, probably towards the end if you can. So we're gonna be using the V2 strategy. So most of you in the room are familiar with that. If you haven't had a look at the V2, you're going to get a reasonably good look at it tonight. Within this strategy, obviously there's a number of inputs, and we're going to go through those. They're built into the strategy within TradeStation. Now, within TradeStation as well, and some of you have already explored this with your training in TradeStation. TradeStation have a strategy library. Now, that strategy library contains strategies that you can basically randomly pick out and do testing on. Now, the library refers to most of the strategies have got a strategy name, and then LE and SE, obviously long entry, short entry, is what that refers to. So anytime you're looking at these strategies that are openly available in the library, if you're looking to trade both sides of the market, longs and shorts, then you would need to put those two strategies together, and we can have a look at that tonight as well. But what we need to remember as we go through this process is that that whatever inputs we come up with are what we've optimized. So we need to just be mindful of the fact that we don't want to over optimize, but we want to get something that's going to be robust in the market. So that's really our goal for tonight and moving forward over the next couple of nights. So guys, let's jump in and have a look at the charts. Now let me just make sure that everybody can see the charts as they're loaded up. I'll get some more screen space for us here so we can see exactly what's going on. Now what I've done is I've grabbed the DAX, because the DAX is one of those markets that it really needs to be highly calibrated, and it's not a market that typically you can just grab some settings and away you go. It's a market that you definitely need to, once you apply some inputs or a strategy and you've come up with your optimization, you really need to continually monitor this market, because it is volatile. It has a tendency to have a seasonal bias as well as a directional bias, and that definitely is reflected in your results, or can be reflected in your results. And it's something that it's a market that really, I would say, is a market that is something you'd want to tackle with, with a fair bit of experience as far as your system trading and your testing. So most traders, when they come to our group, they typically will start with with crude or some of the forex markets, but the DAX is just it's a really wild market on occasion, so you've definitely got to prepare yourself for it. Now what we're going to do is, we've got the strategy loaded up here, but I'm just going to put in the quickly put in the indicators. So we'll insert analysis technique. Now remember that, as I mentioned before, this is a quick review, so look, if you've all heard a lot of this stuff before, I apologize, but I'm just going to quickly go through the strategy, the actual indicators on the chart for the breakout, and then we're going to get stuck into it. So for those of you who are unfamiliar with TradeStation, the indicator set is under the insert analysis technique tab, and you'll see there that we've got insert analysis. I'm putting in the support, resistance and the take profit, so those two are going straight in, so they'll come up on our chart fairly quickly. Now the other thing we want to do, and you can see there I've got an 89 tick, it's a fairly choppy looking chart, so it doesn't look that good. I mean, obviously it's not as smooth as Renko, but if I right click on this and then basically go in, I'm going to also just insert my my show me tab as well, which is going to be the paint bar. So now what I want to do as well, and that'll give us our paint bar for the breakout of support resistance. Obviously with a cyan you've got a long setup, with a white you've got a short. Now the other thing I'm going to do is, if I right click here in TradeStation, I go to insert strategy, I can put any one of my strategies into this, and we spoke about the strategy being what gives you the signals for the buy and sell setups, and we'll produce the performance report. Now if we, for example, just want to look at a chart and be a system trader without actually having a strategy and automation, then all we're putting in is our indicators, so we'd stop there. But because we're system traders and we run in automation, we've got to insert our strategy, and for the purpose of this demonstration I'm going to be importing the breakout strategy, the V2 breakout. So I've already prepared this earlier, so I've already got that loaded up. That would be the strategy I'm going to put in. Now I'm going to go into this strategy and I'm going to give you a quick, very quick run through of it, and then we're going to get stuck into doing some testing. So if I want to find exactly what's on my chart and what's working on my chart, I'll go to Format Analysis Technique. Now that's the main tab, and that'll show you all your indicators, and then if you click onto the second option there, which is your Strategies tab, you'll see exactly what strategy you've got loaded up there. Now, do you think it's a good idea to have multiple strategies loaded up? Maybe only have one on, but is it a good idea to have multiple strategies loaded up on your TradeStation chart, or is that probably something you want to avoid? So for example, I might be doing lots of testing and I'm running a live chart, and I've got this thing running live in the market. I've turned on the automation. Do I want to have a number of strategies sitting there? Yeah, so I definitely don't want to have that, because even though they're off, you just never know what impact they're having on your chart. So call me superstitious, but I've seen some very strange things happen when you've got multiple strategies loaded up on the one chart, even if they are off. So this one's on, obviously. To turn it on, we just basically click that button to turn it off. It's turning it off, so status will turn it on and off. Now one thing I want to quickly do is, in multi-charts we always say maximum number of bars back on a study. Now most of us have been using multi-charts or had a look at it. Now TradeStation, if you're running a strategy, you are going to need, what does this maximum number of bars study will reference mean? It means that for your strategy to work, and I want everybody to check this on this TradeStation platform, for your strategy to work properly, it has to have a lead up to start. So it cannot start from day one referencing 0 bars. It's just not going to work. So with the algorithm that we have in TradeStation, we definitely want at least 150 to 200 bars back. So I'd probably leave it at 150, but just go in and just check exactly, because a lot of the time when I've gone into these things, that's set at 50. So you want to at least have that at 150 and making sure that it's referencing enough bars back. Now in our initial test that we do, so the initial testing we do, we're going to leave out commissions and slippage. We're going to do that later. All we're doing at the moment is we're trying to get something that's profitable. So we're not going to really worry about going in and trying to get all the commission and slippage worked out and the interest rate percentage and the initial capital we're going to focus in on. We're just going to focus in to make sure we've got enough number of bars back, and then we're going to try to, and we're also have to make sure we're testing in our base currency. So remember that if you're testing the DAX, it's the Eurex, that's the euro. Obviously, whatever currency, whatever exchange you're testing in, that will be the base currency. So obviously the SPY to be the Australian, the Aussie dollar, the US markets, it'll be the US dollar. So that's okay. So we're happy with that. Now there's nothing else. We don't have to do anything in automation at the moment. Back testing, no, nothing there. So okay, we're good to go. So once we're in the strategy, we click on this. Now this is the breakout strategy. So I'm just going to give you a quick rundown of exactly how this works. So let's close that down. The breakout strategy is very, very simple. Now you would have heard me talk about this last week. I did say to everybody that when I was testing up the DAX market, and I used the DAX because I knew that that was going to be a tough one to test and prove up a strategy in, I was looking at the market dynamics of the DAX. And what I was looking for is and this is probably a great example here, I was looking for the phases of the market. And what I found was that when the DAX breaks resistance or support, if it doesn't break it by around 8 to 10 points, then it typically doesn't go. So what I thought was, right, well, I want to have a strategy. I don't want to just have the trend trader strategy where if it breaks and closes, I'm in the trade. I want to have a strategy where I can set the entry point as the breakout. So because I found that having that 8 to 10 point breakout component on this resistance or support level, it kept me out of a lot of trades. So the way this strategy is developed is that if I basically break resistance, I'm getting a long setup, so I'm taking the long trade, and I'll get triggered in at that point. So if I go into my strategy now, you'll see that it looks very similar to a lot of the other V2 strategies. We have got times of the day, so start time, end time, you've got two options there. But we've got this support resistance entry offset. So what that means is that if basically I have that set to -1, that's only going to take a trade when I break that support or that resistance by 1 tick. Now, if I've got it set to -8, obviously it's only going to get me into the trade if I break it by 8 ticks. So that's critical because that determines whether you're in the trade or not. Now, the rest of and we'll just quickly go through these. You've got your initial stop. Every strategy has to have an initial stop. We've got our trailing stop, our TP, which we've got here at plus 9 or 9. We have our support resistance stop. So we've got a number of stop strategies. We have our profit target, which is set at 42 there. We've got max wins, max losses. So these are all inputs that we can potentially test on when we do our optimization. So what we're going to do now is we're actually going to do a little bit of optimizing and testing. We're going to start with our support resistance. We're going to challenge this and say, well, Shane believes that 8 is the best value. I tend to disagree with that. So I'm going to put in -10 to +20. So you're always going to start with a negative number and finish with a positive number. Now, whatever your increment is here will determine how much testing is done, how many increments are tested in this range between -10 and 20. So this will test every 1 point movement in that stop that you've got there. So basically what you're saying to this strategy is, all right, test up for me what the optimal stop is between -10 and +20. That's what you're saying. And you're going to do it in increments of 1. Okay, so that's fair enough, we'll do that. So once we hit optimize, that is set in there. Now, if we were going to do exhaustive testing, we would test every single parameter in this range, and it would probably take us a week to get the results of that. That would be an exhaustive test on what we're looking to do. So obviously we're not looking to do that. We're looking to do some basic generic testing, and we're going to, because we don't have a week, we've only got 30 more minutes, so we've got to get through a fair bit. So we're also going to test the stop here, so we'll throw in the stop as well, and we'll say, look, we're going to use John Sweeney's concept of good trades don't go too far against us. So we'll say we're going to run a really tight stop, 10 points, and we're going to push this one out to 40. But what we're going to do here is we don't really want a 1 point increment. We're going to give ourselves a little bit of room and speed on this optimization. We're going to change that to an increment of 5 and go okay. So now we're optimizing, we go okay. Now we can do this for every single input we've got on this strategy. So we go okay. Now this is where it gets interesting. If I say, I'm going to do a standard, I can do a standard or a walk forward optimization. I'll do a walk forward optimization. Actually, I'll do a standard optimization. I'll show you where the walk forward component comes in. I'm going to basically, now there are two ways we're going to do a standard first, and I'm going to show you how the standard optimizing can also build in a walk forward analysis. So we're doing a standard test where we've got two options, exhaustive and what was the other one? So there are two types of methods of testing we can do. Exhaustive and something, genetic, beautiful, excellent. If I go back to exhaustive's test count is 217. The genetic test is 7,250. So let's have a look here. And what it's going to do, this is going to be interesting because it's going to come up with an error message. It's going to say, look, the number of tests generated by the chosen genetic parameters is greater than the exhaustive method. The optimization method is being changed to exhaustive. So it'll automatically say, well, look, I don't want to do that. So let's go back here. We'll abort that. We'll go OK. Sorry about that. I'll just go back to our strategy. And you put in parameters there that really aren't that are going to be. So we'll optimize. If you decide that you want to do exhaustive testing, but there's only 270, it'll just do a genetic test. So that's what it's chosen. So even if we want to do genetic to speed up things, it's already telling us that the exhaustive is only 217. So what we're saying there is we've only picked two inputs, so we don't have a lot of inputs to test. So what we're going to do now is we're going to go back here and we're going to go to our advanced settings. Now this is interesting because inbuilt in the strategy is a walk forward analysis. It's the first window of us doing our walk forward analysis. So basically you've got what this is saying, we've gone into the advanced settings, and what will typically happen is that if you go into this advanced settings, you've got your out of sample window. So remember we've got our in sample data, which is our test, and what we're saying is that, all right, well, in our out of sample data we want to include the option to be able to look at what happens with the last 30% of our data that we're testing. So what this is saying is that, right, exclude the first 0 to 0% and the last 30% of the data during the optimization. So what it's going to do is it's going to take that last 30% and allow us to look at how our results are going to go moving forward. So whatever our test results are going to be, we can see exactly how they'll look moving forward. So let's do that. Let's basically click OK there, and we're going to optimize. So this is a very, very quick optimization. It shouldn't take too long at all. and so we're getting a little bit of profit here. We haven't got a big data sample. I've only picked a fairly small data sample because this is a very volatile market, and this is just our first attempt. So what we're going to do is we're going to develop up a strategy. Now it may be I might pick 2 markets and we'll work on, but basically this is just good practice for us to get into the habit of going through this whole process of looking at exactly how to get a very robust strategy and put that together. So here we go. We've got 58 seconds left, estimated time. So it's telling us that there were a total of 217 tests. We didn't need to worry about the exhaustive testing because it was going to capably handle that. It didn't need the genetic and or the generic. So time elapsed 1 minute, so we should be fairly much done here in reasonably quick time. And what we're going to do now, once this report finishes and we get our performance report, because that's what it's going to do, it's going to give us our best settings. So what it's saying at the moment is the initial stop at 35, or it's pushed out 35 ticks, and it's up to $6,000, and that initial entry, that breakout, I remember I was saying to you that I thought +8 was, or -8 was the entry. That was really what I was seeing with my testing. But in this very short sample that we've got, which is a month or so of data, it's showing me that in this month that +1 was the optimal to take. So if we go in here and we say, right, well, okay, fantastic. So that gives us a fairly, it's not a fantastic equity curve, but it's made money, and we'll have a quick look at our drawdown. But what we want to do, so if we go in here, we'll just get rid of that for a second. If we go in here and we say, right, well, what's our strategy done? Now, we're getting pretty used to this, 1475, 1862 is our, so 1475 is our drawdown. That's not bad for our net profit. And if we have a look at our average trade net profit, we'll see that 56.89, that's not too bad. Our profit factor there is 1.87, and our net profit is 6,000. Obviously our net profit to max drawdown isn't fantastic, but it's only a small sample. It's a very small period of time. It's just over a month. So it's less than a month. So that is not too bad at all. You can see there that a good distribution between the longs and shorts, so there's not really too much of a difference there. In fact, that's probably the closest I've seen in a long time. Percentage profitability, the shorts have got it just, but overall percentage profitable, not too bad on the breakout. So what we want to do now is we're going to go and have a look at, right, well, we just ran an optimization report. So let's just go to view and have a look at what that was. There's the optimization report. So what this is here, I just went view and we ran the strategy performance report, but what I want to do, I've just put some work into running an optimization report. So I want to have a look at what are the other best settings. So the key thing that we tested on were our initial stop and our offset. So this grayed out line here is basically our best setting. That always comes up with your best setting. Now if you decide that, right, well, I really like that, there's the performance report on it, looks okay, I'm happy with it, but look, I really wanted something with a better average trade net profit. So let's have a look at our average trade net profit. We'll go through it. So you can see up the top here we've got the number of tests that were done. You've got, or the test number I should say. You've got your profit. So that was not the most profitable strategy, 5787. Our most profitable was up here at 7,100. And you can see there that was an initial stop of 20 with an offset of -2, or +2 I should say. So that was our most profitable. Now let's have a look at that compared to what we've got here. Now if we go over and have a look at our average trade net profit, so we'll just pull this over a little bit, you will see that, so we'll just move that over, average trade net profit 38, 33, so that was good, but we've got an average trade net profit there of 48. We've got a 40 there, and then you've got $28 average trade net profit up here at 7.1. So if we decide, right, well, look, I like this, but I'm going to have a look at, I want to have a look at the results on this one. So I can just left click on that box, and I can go, right, well, I want to apply that chart. So I'm going to apply that chart, those settings to the chart, and then I can go to my performance graph and I can have a look at exactly how that looked. So you can see that that took a bit of a belting on the drawdown. So our settings for our optimization were basically the premise was drawdown and obviously net profit, and you can see there that even though that did well, it still took a little bit of a belting on drawdown. Now we can look at we can go in here and we can say, right, well, it did make a good amount of money, definitely the longs got up a bit there, but you'll see also that $28, it's a smaller average trade net profit. Now if we go in here, we can also go down here and say, well, the 48 here doesn't look too bad, does it? So we'll go back on that one. So we're just here, we'll scroll across. So that was our, so I'll just bring that one up again. We'll apply that one to the chart. Okay, so that's now highlighted, and that'll give us our equity graph on that as well. So what we're able to do is we're able to look at these very quickly and decide, right, well, even though we've done our testing, we can then go in and say, right, well, was that the best results I could get out of that chart? You know, of that testing I've done, was that the best I can get? Now you will have, and we do have some criteria for what's our criteria for selecting a strategy as far as moving forward once we've done our initial testing. I mean, we haven't really done any kind of third level testing here as far as days of the week or longs versus short, but what would be one of the typical things we would be looking at in this data sample here to make sure that we had enough we had something that was going to be robust in the market. We can also go into our file. We can go into file and we can go into our let's go into here, chart analysis preferences, and we can go into, sorry, I'll do that again, just slip back in there. So whenever we bring up a TradeStation strategy optimization report, we can actually go into this report and we can say, right, well, I don't want it to appear like that. I want it to have a slightly different look. I want it to actually come in, so we'll go to chart analysis preferences, and I'm going to want to keep, when I do a display for the strategy, I want to see I want to keep the highest net profit at the top. So I'm looking for the highest net profit, and it's going to default sort is going to be the net profit. So you can decide exactly how you want that based on the filters. Yeah, that's it. Ideally 50. That's it. You really want that good spread. Now you can do it on any number of these. You know, total trades, winning percentage. You can do it on max consecutive winners. You can sort on any one of these numbers. So you can really set average trade net profit. You can set your criteria to whatever you want when you do your analysis. So automatically when you run your optimization report, it will bring up the highly calibrated, or the one that not the highly calibrated, but the parameters or inputs that you've factored in as being the most important to you. So quickly you can get rid of the stuff that doesn't apply, and you can see exactly how that looks and how that might apply in the market. So what we're going to do, to me, I'm going to look at the $48 one, because that's what I want something with a good average trade net profit. And what I want to do is I'm going to just do a now this is interesting. Remember how, just going back a minute, we were in this strategy performance report and we said, right, well, what happens if we actually set up a parameter within the initial testing, the optimization, that said we want to see what happens after that with the last 30% of data that we test, so that out of sample data. So the in sample data is the data we test, we do our optimization on. These are our best settings. What happens to that out of sample data? So what happens once we set this thing live in the market? So what you've got in TradeStation, once you set up those parameters in your testing, you can pull down that 30% of the data that isn't contained in this performance report. We can go in here and say, right, well, we're going to have a look at the out of sample data and see how that strategy performed. And you can see here that when we apply that last 30%, which is the last 30% of trades that weren't tested with these settings, we can see that applying it, this system has a bit of a drawdown. So it's a drawdown of almost $1,400, and then it starts to rally. So it's interesting because if we go back, we'll just quickly go back to our in-sample data. If we go back to our in-sample data, our max drawdown is about, let's have a look at it. I think it was 1475. Oh no, 1125. So our max drawdown was 1125. So as soon as we put this live into the market, or our testing goes live based on the out of sample data, we hit our max drawdown. Interesting. So this is a really good way for when you're doing your testing, just to see how you're in, and this is just one mechanism we can use for our walk forward analysis. So we're just touching on one way we can do it tonight. We're obviously going to go into a lot more detail with system within TradeStation that allows you to go through the walk forward optimization. But that is a great way if you're looking at your data and you're thinking, right, well, I'm picking my data based on average trade net profit. I'm also cognizant of the drawdown. I want to make sure that I'm not being exposed to a high drawdown. I've got my circuit breaker in place, so I know when to turn the system off. But I also want to see, right, well, of these strategies. So let's go, for example, over here. Now, it's saying here that our walk forward optimization that we've done suitability is very low. That's because we've got only a very small window of time. We've basically got less than a month that we've tested. So we have not got a lot of time that we've tested. So when we go here and we say, right, well, let's go into all our data, and if we go into our sample data, we'll go back up here, we'll change the settings up here to apply test on chart. And you'll see here that once we do our data test, so we'll show apply the chart, we can quickly pick up our performance report. There's our performance report. We know we had that fairly substantial drawdown, and that drawdown was about 3,162. Let's see what happened in the walk forward analysis on this thing. So you've got in your in-sample data, you've got something like, what have we got, almost 180 trades, 179 trades. In our out of sample data, we've got actually not a bad result, have we? We don't have anywhere near that drawdown. We're starting to get a little bit of a dip off now, but you know that's yeah. So it's a good way to see exactly how robust your strategy is going to work on that last 30% when you apply that to the market. So guys, that's the first part of walk forward testing I wanted to do today. Basically just looking at your strategy, picking out what your basic inputs are going to be. Then when you've gone through, and remember that we're basically just doing some generic testing here. We're not even kind of looking at days of the week, longs versus shorts. So that would be stuff that we would be applying to, once we've got our what we call our high performance system, we would then be wanting to do this walk forward analysis in more detail, and that's what we're going to do on Monday. We're going to basically on Monday go through the walk forward optimizer, and we're going to go through and do a full scenario of walk forward analysis. So we're going to use this DAX, and we're going to try to develop up the DAX based on the 89 tick chart. Very tough market to trade, so we're going to see how we go with that, and we also might have a look at a secondary market as well, something that we can all potentially trade at the end of it. So how many trades initially? Let's have a quick look here. So we'll go back to our sample data there. 179 trades in sample. So it had a fair number of trades. This is trading a lot though, but it's only a very short period, and that's what's given it the very low rating for the walk forward suitability. So very, very small sample as far as time. A lot of trades, but not a lot of time. So, you really, if you look at a business cycle for the year, you're only getting, less than a month snapshot. And we know that, particularly on the DAX, you're really wanting to have 200 to 300 trades, and 200 to 300 trades over probably a couple of business cycles. So you want maybe 6 to 9 months at least. So you've got your quarterly reports in there as well. So guys, that's what I wanted to cover on the sampling tonight. What I also want to do is I want to just go back to our chart here for a second, and we're going to go through a fair bit more on the obviously the walk forward optimizer, which is our walk forward optimizing strategy here. We're going to spend a fair bit of time on this on Monday, so if you haven't used this before, you're going to enjoy walking through that. But one thing I wanted just to give you a couple of updates on, firstly, was that within the strategy, and it's in all of the strategies, there's a strategy update coming out, which is basically so we'll go format strategy. It's the support resistance. So if some of you have identified a support resistance error we had a bit of an error on our support resistance stop. So we've come up with a fix on that. So there's our trailing support resistance. So what that is basically the support resistance is when we get in a trade, say a long setup here. So we'll use this example here. When we get we've got our initial stop, and then you'll basically have your trailing stop. Now the trailing stop will fire off basically at a level around here. So that would be your trailing support stop. So every time support prints, you would move your stop would basically set up a couple of points above or below that, I should say. Now if it was a short setup, it would be on top. Now we have found that stop there with version 9.1 isn't working as it should be. So I've come up, not I, but Michael has come up with a strategy fix, which I'll be putting up on the website today. If anybody wants that urgently, just let me know and I'll put it in your Skype. But otherwise, it'll go up on the website and you can download that as an ELD. So it's just running an ELD, and that'll update your support resistance stop. So you may want to also do some testing on that, because that hasn't really fired off as it should do. So I would basically run it on all the platforms, Scott, just to be sure. We don't want to it's a fix that is definitely working. So I would probably just as a precautionary measure, I would just kind of run the ELD just across the board. Yep. Right, guys, the other thing I was going to mention too was that Ducus Copy option is up and running. My platform's going, and I'm going to be setting up the information in relation to getting demo accounts set up. So if you're interested in using Ducus Copy, they're going to be available through multi-charts, which is fantastic, because normally it's about $100,000 to open up an account with them, and they're allowing us to do demo accounts and open accounts up through them. So that's fantastic. The other thing too is that I've got some news on TradeStation and the MT4 bridge. So we do have the MT4 bridge. I sent out an email yesterday about the MT4 bridge. Now what that basically means, the MT4 bridge is an option for us to take, say, the currency trades, because many of us, particularly in Australia, can't trade the currencies through TradeStation. So it allows us to take our currency setups and apply those to an MT4 chart. So it automatically takes the signals, sends that signal. Say for example, where this was a currency chart, it would send the signal here that sets up directly to MT4, and MT4 would put us in the market, and basically so we can trade through whatever broker we want. Now the other great news is that Those of you who have got a dedicated server, now I've done a graphic up on that. I don't have it up in the room tonight, but I'll basically just do it on the chart here at the moment. Those who have a dedicated server basically will have the option. So let's assume this is you open your chart, your computer up, and there's your dedicated server. You can have what's called a virtual Windows option on your dedicated server. So what that means is that you've basically got two IP addresses and virtually two computers. So if, for example, you're using TradeStation and you're trading the futures and you've got a sub account set up, so two accounts set up where you're trading so you can trade crude on different time frames or whatever it is, then anyone who's got a sub account or a secondary account with TradeStation has the option to have a second platform. So if you've got that option to have a second platform, you could basically load that second platform up on your dedicated server. You could be running one TradeStation account trades the euro say cycle. So this TradeStation account's trading the euro US dollar cycle trader, and so you can't actually do this in TradeStation in the one platform. The other TradeStation account trades the euro US dollar trend trader. So what that means is you can be long and short on the same market using TradeStation. So they're firing signals into MD4. You've got, now this is obviously once you build your account up and you're getting a good account size and you're wanting to move into the currencies and you're really looking to kind of capitalize on that. So what you then can do is basically, if you've got say 4 or 5 currency pairs here, you could be trading all of those currency pairs on the cycle, or reversal all of these on the trend trader or the cycle, and you can be trading the same market within 2 different platforms. So it's a great benefit because it allows you to basically be trading a multi-system strategy using the TradeStation platform. Now the advantage to that is that basically the indicators in the Forex indicator works, or the Renko indicator, the V2 works beautifully in TradeStation. So there's a massive advantage to us tapping into the MT4 platform and being able to execute with whatever broker we want. So that is fantastic. So guys, that's going to wrap it up for me tonight. Any questions? We're going to be doing part 2 of this session on walk-forward optimization on Monday. So it's going to be an interesting session because we're going to look at how much a difference the optimization makes to your strategy, and making sure that we don't over-optimize. That's one of the keys, making sure that we keep our strategy robust enough. And we've spent a fair bit of time over the last couple of months just working out how we do that. So I'm sure we all have a very good idea of how to keep our strategy robust and apply our circuit breaker. So thank you for your time tonight. We'll be back again on Monday for a good update, and we'll be walking through the walk-forward optimization part 2. So there'll be probably 3 parts of this because there's a fair bit to cover on Monday as well. So I dare say we won't get through it all on Monday night. Okay traders, thanks for your time. If you did enjoy the video, please feel free to just click on the like button below the YouTube video, and that'll help us to keep posting these videos up on YouTube, because we'll be getting some feedback, which is great. And also, if you'd like to become a GMT Pro Trader, please email info@gmtfutures.com for more information. You can also visit our website at www.gmtfutures.com. So thank you for your time. Have a great day, and I'll catch you on the next video update. Cheers.